In today's red-hot real estate market, you'll hear a lot of buyers talking about waiving their appraisal contingency or agreeing to cover the appraisal gap. But what do these terms even mean? Can you just waive the right to have the home appraised and save the money, not deal with the headache? Because in many cases, that actually sounds awesome. Unfortunately, that's not what that means. Real quickly, as you may recall, if you're taking out a loan or a mortgage to finance the purchase of your home, the lender giving you the money is going to require an appraiser to go out and perform an appraisal. Essentially, that just means the appraiser is going out to do their own research and they're going to come back with a stated figure that's going to be their opinion of current market value for the property. Now, it says in your purchase agreement that the number you and the seller have agreed upon cannot be higher than the amount that the appraiser says it's worth. That the appraiser needs to come in at or above what you and the seller have agreed on. In some cases, this doesn't happen, and that can be a problem, because what do? Let's say you and the seller have agreed on $700,000, but the appraiser says $650,000. This is what we call an appraisal gap. The appraisal number is lower than the purchase price you and the seller have agreed on. In this case, $700,000 and $650,000 leaves us with a $50,000 appraisal gap. Now, it used to be that when that happened, we would contest it, and we still can, but that's for another video. Let's say for a moment that the appraiser isn't going to budge, and everyone is left with a $50,000 gap, right? Sellers don't want to just say, okay, the sale's over, walk away, because the buyer can do that. In a typical agreement, the buyer can say, hey, look, the appraisal came in too low. The lender will not give me the money to purchase this house because they feel the price is too high. So you can go back and try and get a different appraisal, and sometimes that works with a different appraiser. But here again, let's say that's not happening this time. You're stuck with this appraisal. What do? So the buyer could back out, and they get their earnest money back, and the seller puts the house back on the market in hopes that the next buyer comes in with a better appraisal number, because frankly, that can happen. But the market right now is real competitive, and sellers don't want to risk having a buyer walk out and keep their earnest money. So one thing that buyers might do is say, we waive our appraisal contingency. Now, that doesn't mean that the house won't be appraised, because that's up to the lender. Sometimes they'll waive the appraisal. It's not the norm, but it does happen in some cases. And there is no appraisal, and everybody's happier because of it. And as a buyer, you even save some money. But if the buyer wants to waive the appraisal contingency, it means that if the appraisal comes in lower than the purchase price that they've agreed on with the buyer, they can't back out and get their earnest money back. Now, they can back out, but they would lose that earnest money, which in today's market is typically anywhere from $5,000 to $10,000. So if the buyer says, look, we'll offer you $700,000, and we agree to waive the appraisal contingency, it just means that the buyer is willing to risk their earnest money if the appraisal comes back low. So waiving the appraisal contingency does not mean it won't be appraised. It just means the buyer doesn't have the right to back out and get their earnest money back if the appraisal is low. Okay, but what does it mean if the buyer says we're willing to cover the gap? Again, let's say $700,000 and $650,000 on the appraisal, and we have a $50,000 gap. Some buyers will say, listen, we'll cover the first $15,000, or we'll cover the first $20,000. And then presumably, if it's still too much, the seller would be expected to bring their price down to meet. In this case, the buyer says it came back at $650,000, we'll throw in $25,000, and then the seller comes down $25,000, so it's a $675,000 sale, and the buyer's thrown in an extra $25,000 in cash to make up the difference in that gap. One thing to consider, by the way, is that that money that the buyer brings in doesn't actually go toward anything of their benefit. In other words, it's not buying down the loan, it's not buying down the mortgage. Basically, you're telling the lender, look, you think I'm paying too much for this property, so I'm going to give you some money directly in cash at closing that you can put in sort of a safety net account, in theory, that protects you because you think I'm paying too much. You're basically agreeing to cover what the lender deems to be their added risk because of this gap. I hope that makes sense. So one option is that the buyer says, hey, we'll cover the first $20,000. Because in most cases, they assume the appraisal couldn't be any more than $20,000 lower. And they might feel in a super competitive market that, hey, look, if we had to throw a little extra money at it, even though we're kind of pissing money into the wind, it's worth it. because we don't want to keep going after this. We're taking time off from work. There's the emotional strain. Prices are going up. Maybe we're okay with this. And for some people who have the money, it's okay if they decide to throw money at it. Now, other people will say, we won't just come in with an extra $15,000 at closing to cover the first $15,000 of the gap. They'll say, we'll just cover the gap. So if the appraisal is $10,000 low, they'll bring in $10,000. If it's $50,000 low, they're saying they'd bring in the $50,000. Now it's possible that a buyer could say, we'll just cover it whatever it is, and they get a crazy low appraisal. Let's say again, 700, 650, and the buyer thought there was no way it was going to be more than 10 or 15 grand, and it turns out to be 50. The buyer may say, I know we said we'd cover it, but we won't. They would then be in breach of contract, and the seller could say, you're out, and the buyer would lose their earnest money. Consider for a moment, I don't want to get too far into the weeds here. Some buyers are considering this and weighing this option as this. I have $5,000, maybe $10,000 in earnest money. I'll say that I'll waive the appraisal contingency, or that I'll cover the gap. And if it comes in low, maybe I'll throw in 5 or 10 grand if it's that much. But if it's not, I can always back out, and my risk is my earnest money. Now, you and I may stand here and think, gosh, to be willing to lose 5 to 10,000 in earnest money is kind of crazy to just walk in with that. But buyers might weigh out the risk and say, I don't think this appraisal will come in low, so I'm willing to make this deal with the seller that I may or may not fulfill. Now, you could debate whether or not that's appropriate, but it is a tactic. So, what are we trying to unpack here? People might say, I'll waive the right to the appraisal contingency, meaning if the appraisal comes in low, I can't back out and get my earnest money back. I'll either pay you, seller, the money to cover the difference, or I'll back out, you can keep my earnest money and go back to the market. Sellers kind of like that option, but the one they like more is a buyer saying, I will pay to cover whatever that difference is. Some questions that are now starting to come up is, does the buyer need to prove that they can even do it? Because again, they could say, I'll cover it, thinking it's not going to be a problem. And then when it comes up, say, I don't have that kind of money, you can keep my earnest money and maybe I'll just go look for another house. So it's a lot to consider, and there's a lot of risk to consider. Should you consider waiving the appraisal contingency or agreeing to cover the appraisal gap? I would give that a definite maybe. I'll be frank, for some clients, I don't support it because I don't think they have the assets to cover it. That between their down payment and then some notion of throwing money in an appraisal gap, they'd be wiped out. That's no good. Now, as a side note, you can take money out of your down payment and shift that to the appraisal gap coverage. Just note that it's going to change the terms of your loan, perhaps. That's something you have to work out on a case-by-case basis. But the other issue is, does it wind up meaning that the person's just into the house for too much? Using our 700 and 650 figure, let's say they've agreed to pay 700, which they think is fair. The appraisal comes in at 650. If they throw an extra 50,000 in cash in, they're into the home now for 750. And one consideration is, do they still feel that the house is worth it? Because it was worth it at 7. Is it worth it at 750? You're not paying 750, but because of that extra 50,000 that goes away, you're essentially into it now for the 750, if that makes sense. And that's something that buyers really need to consider. Will that extra money be worth it? And then the last thing I'd say is the house that you're looking into, does it support the price that you're in? Look, I've got clients right now with a sale pending where they did agree to cover the appraisal gap. But one of the reasons I was comfortable with it as an option for them is I was very, very confident that the neighborhood they were buying in would support the price that they offered. They were well above the seller's asking price, but the seller's asking price was low. It was, I don't know if it was intentionally low, but it was low. So the fact that they went well over the price, I'm not going to say how much, but it was a lot, was a little bit intimidating and made them a bit nervous for good reason. But at the same time, if you looked at the neighborhood they were buying in, that neighborhood supported the price they offered on the house. I would argue that in that case, it might be an acceptable risk because the appraisal is probably going to come back good. And if you had to put a little extra money into it, based on the neighborhood, it might still work out and your total investment might still be justified. The challenge is if you're looking in a $500,000 neighborhood and offering $600,000 on a house, even if that house is bigger and better than everything else, and you feel like it's worth $100,000 more than everything else, the risk of agreeing to cover some appraisal gap or waiving that contingency might be too great because a $600,000 house in a $500,000 neighborhood might be a tough sell with the appraiser. Whereas if you're buying a $600,000 house in a $600,000 or $700,000 neighborhood, even if the house doesn't comp out and it looks like you're paying a bit much, the fact that the neighborhood supports that valuation means you have a much better chance of getting the appraisal you need, or that it's only going to come in a little low, and that the risk or that the amount of money you may have agreed to put out is quite small. Does that all make sense? If you have any specific questions, do reach out, because it's a complicated issue, and it's one that should not either be a blanket yes or a blanket no. There are times when I think it might be an acceptable risk if it works for the client, and I have certain clients where I would say, by no means am I comfortable putting this in an agreement for you, and I have a couple clients right now where I would straight up tell them, no, I'm not willing to do it for certain reasons that are specific to them. So there's a lot to consider. It's not universally good, it's not universally bad, but it is a risk, and the ability that you have to cover the risk and the comfort you have with the consequences of the risk are important. Because if there's one thing I know about people, it's that most of us are okay with risk as long as it works out in our favor.